Check the mic and make sure it sound right.
Hi, I'm DK Will. This is DK Will Talk About It, and let's talk about it. In my prior video and videos before that as well, I covered an interesting sentiment on retail investors and how we're interpreted and manipulated, and how I'm going to give a perspective on some articles that I'm going to cover here, just a couple articles. But the goal is to help us keep a grounded perspective. I'm sorry for all the stuttering there. I'm usually far more eloquent than that. But nonetheless, we're going to look at some interesting information that will help put this in perspective, because if you recall when I covered it in the previous video, where retail investors grow weary of cryptocurrency, I said don't let them tell you how you feel. So let's consider this article here. And in the article taken from the block, it's dated today, September 4th, 8:49 a.m. Right now it's about 11 a.m. My time, so it's only been up for a few hours. But it says that crypto funds hit $342 million outflow streak as Bitcoin bucks the trend. Now, you'll probably recall in the prior video, if you watched it, I thank you for that. If you didn't, maybe you should. But I finished it out with some comments about Bitcoin and how Bitcoin is the flagship, the leader, and quite possibly the bait. But nonetheless, in this article, it talks about the outflows, and you can see here, we're going to cover many points from this and discuss them. But it says here, digital asset investment products saw outflows of $11.2 million last week, adding to a 7-week streak of negative sentiment and delivering $342 million in total outflows. Bitcoin products bucked the trend, witnessing $3.8 million of inflows following Grayscale's legal victory against the SEC. That, folks, is exactly the reactions they want. Now, if the institutions are still applying for their ETFs and things of that such to create a Bitcoin ETF, then a lot of this investment must be coming from sources besides just them, correct? Of course, it could be coming from them as well, as they buy low, getting ready to sell high. Now, let's not forget that, because they're going to buy it now so they can sell it in their ETF later to you higher, okay? Once again, keep in mind that video I just did, the most recent one, on the potential outlook for Bitcoin. But I want to help put this in perspective, that 342 million. But let's read on just a little bit more. You see here, it says in asset managers such as Grayscale, 21 Shares, Bitwise, ProShares saw outflows of 11.2 million last week, adding to a multi-week streak totaling $342 million. So this is a multi-week figure of $342 million. But comparatively, it says outflows cooled off considerably from the 168 million seen in the prior week. Okay, so that also helps put that number in perspective. Nearly half of it was from a prior week. It goes on to say this year has been marked by significant fluctuations in investor flows, primarily driven by the ever-present hopes and concerns, emotional hopes and concerns surrounding digital asset regulation. Last week epitomized this sentiment. And so folks are coming in and out of crypto according to them, and they throw big numbers at you of $342 million. Keeping in mind that the reason they do it is because they want to tell you how you feel. Now, if you feel the way they say you feel, then you are an emotional investor, and you probably shouldn't be doing this. But if you are a sound reason investor who bought based on sound reasoning and technology and fundamentals, then you probably enjoy hearing this. Because if you were to take it into perspective, this $342 million, I took a search to find out how much of the population is invested in cryptocurrencies. As of 2021, it says 3.9% of the population has some ownership of digital currency. That figure amounts to 300 million individual investors total. Now that's total, folks, and it's probably based on addresses, and anyone involved in crypto for any longer than a year has multiple addresses. So the number could be less, but let's just go with the full number of 300 million and compare that to 342 million in outflows. So basically, if you compare the numbers and they make it sound, oh, it's terrible, oh no, my God, people are running because they want you to get out of it. They want you to get out of it so they can get into it cheap. But $342 million with 300 million people at the peak is barely more than $1 per person. Can you see the perspective of it all? Bogey started. Let me pause for a minute. This article went on to say that the week started with high hopes for a spot Bitcoin exchange traded fund in the United States as optimism surrounded the prospect of approval rose after the United States appeal courts overturned the SEC's block on Grayscale's proposal. However, the overall sentiment was knocked again as the SEC delayed 7 spot Bitcoin ETF applications. Notice from whom? BlackRock, Fidelity, VanEck, WisdomTree, Invesco, Bitwise, and Valkyrie until mid-October, even giving timelines. These are communications, folks. These are communications when you especially consider the fact, as I mentioned, that when you put this $342 million into the proper perspective, recognizing that the global population of crypto investors only amounts to 300 million people, that's 1 in 25 people, that when they throw this big number at you of $342 million outflow, if every single one of those 300 million people were retail investors like us, we would have each taken out about $1.14. That's how fast we would have been running from the crypto markets if we allowed them to tell us how we feel. Now imagine that $342 million, as I mentioned before, was 168 of it was from a prior week, and this is talking about adding to a 7-week streak. So even when you look at it that way, it's not very large numbers, and the reason it's not very large numbers is when you consider the players. It says asset managers such as Grayscale, 21 Shares, Bitwise, and ProShares. Now, Bitwise made me have to agree to too much to go there. But when you look at places like 21 Shares, I never heard of them, but I know now that they're the world's largest issuer of crypto exchange-traded products, which would include an exchange-traded fund. Okay, and then we had ProShares, who is the ETF revolution. It says they are at the forefront of the ETF revolution since 2006 and offers one of the largest lineups of ETFs available. Well, who offers the largest? Oh, just another person mentioned here. As the largest digital currency asset manager, Grayscale helps investors across the ever-evolving digital economy. Grayscale. So when we take into account those players and we see this $342 million over 7 weeks, they're just communicating with each other, folks, and letting them know where we are in the stream of time. And so for our perspective, we don't want these numbers to rattle us, because if you stop for a minute and don't dig the way I just helped you dig just a little bit, and you see, oh my God, people are running 342 million, I'm getting out. And you are running from $1.14. But see, you're not going to run from $1.14. That's how the math works out. You're going to run from your investment. So if you invested $1,000 and it fell to $6, you're running from $400, and you're going to be a loser. You're running from $400 along with the rest of those retail investors who buy into this hype, this hyperbole, this deception, this psychology of the market, because you were relying on ever-present hopes and concerns and not technical analysis, fundamentals, and a well-rounded knowledge of what you invested in. And like I mentioned, Bitcoin might not be it, because you see these names mentioned here, They were also mentioned in this other article. Who are the ones filing for the ETFs? Now, these are the ones that affect the prices. These are the ones that can move around $342 million as if it's nothing. The BlackRocks and the Wisdom Trees, the Valkyrie Investments and the ARK Investments, the VanEck and the Fidelity Wise Origins, the Invesco Galaxy Bitcoin ETF, the Bitwise and the Global X. Those are the ones who are really moving this money around, but they're not moving this money around to their detriment. They're moving this money around to anyone who buys into the hyperbole detriment. But it's only going to be to your detriment if you allow them to play with the numbers, to use that hyperbole, and tell you how you feel. Retail investors are growing wary and running out at $342 million when they know they are the ones moving the market. And our $1.14 doesn't mean squat if we represented every single one of those 300 million people, and we don't. If those of us who are invested only had one single address for our cryptos, and we don't. Matter of fact, you can test me out, for instance, if you're on Coinbase. Go on Coinbase and look at your settings. And then go and look at your addresses and see how many addresses have been assigned to you. And it will boggle your mind. No, don't let them hyperbole you out of your money. Don't run because that's what they want you to do. Run. Notice how the article stated. It stated crypto funds hit $342 million outflow streak as Bitcoin bucks the trend. Funds now, okay? That's them playing with the numbers to scare you if you don't read behind the hyperbole, if you don't read behind the psychology, if you don't read behind the hype, if you don't read behind the ever-present hopes and emotional concerns. No, if you know what you invested in and you're solid, stay solid, because they want you to run away from certain cryptos and they want you to follow what's bucking the trend into Bitcoin. Let me be clear. Can you make money in Bitcoin? You can make money in any coin if you buy low and you sell high. But nobody makes any money. Nobody loses any money until somebody sells something. They can either be selling to you or you can be selling to them. But somebody's got to sell something. So if you are, and you've watched my prior video regarding Bitcoin, who's bucking the trend, just make your money and run. Because see, the dollar is losing value faster and faster and faster. And quite honestly, you're going to need the dollars if you're in the United States. And that's what's putting those of us who are investing in alternative financial products will come out ahead. Those of us who are investing in gold, when gold-backed assets are in place, well then obviously gold becomes worth more money. Those of us who are invested in this nascent technology of crypto, where it has nothing but room for growth. Although I've said many times, probably the overwhelming majority, in harmony with Brett Garlinghouse, is going to disappear. So make sure you invest in sound ones. But don't let them tell you how you feel. Because Bitcoin may not be the sound one. I've always thought it might be the one grandfathered in, like, Kleenex, because it started it. But no, what Bitcoin was a pilot to show that they could convince retail investors to spend $60,000 on something that they don't even hold in their hands, in their possession, out of nothing but hype. Out of nothing but hype. So it's been proven that people are willing to spend big money for it. But when Bitcoin went from $60,000 to the 20-some thousand dollars it is now, 5, 6, 7, whatever it is, that money, tens of thousands of dollars lost, did not evaporate. Somebody sold something and somebody made money. So don't let the hype get you. It's hyperbole. I'm DK Will. This is DK Will Talk About It. I've talked about it. Have a wonderful day.
Check the mic and make sure it sound right.